They're giving the market what the market wanted. Kramer's been asking for it. Everybody's been asking for it, and they're knocking it down. Spencer, what's up?
Yeah, finally, 3.5 million shares. An at-the-money offering, which just means that they could do it over time, meaning they could offer the shares over time or sell them over time. But 3.5 million shares, we obviously don't know a price yet. They're going to do it for, they were as vague as all these filings are. They're going to use it for general corporate purposes. They're going to transform the balance sheet, transform the company into an e-commerce business, blah, 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 blah. All you need to know, 3.5 million new shares potentially coming into the market. That's it.
Triple D. I'll let
you don't want to talk GameStop?
I mean,
this is just the random walk theory all over this stock. If you don't know what the random walk theory, it's just exactly what it says. The stocks walk randomly, and you cannot predict the move minute to minute, day to day, week to week. This is a random walk stock. There really is no way to really predict where GameStop is going. We've had some setups, and yes, we've had some good calls, where, okay, it's not going down. I would say where we are right now, it's more random walk. Yes, it's down because of the offering, but interesting enough, if you do the math on this, and
it's not big. It's not huge.
It's not like the AMC proposed offering, which was going to dilute the float by 100%. I mean, this is literally just, or by 50%. This is literally just 3.5 million on how many shares outstanding? I looked this morning.
I think it's like 70. Is that right?
Yeah, so you're talking a 5% dilution only. So proposed 5% dilution, they're hitting the stock down 13. So in this case, the ARBs are actually overshooting. I think they have fears of the Viacom situation probably maybe going through their head, where obviously we know Viacom had a small dilutive offering, and then we saw it completely implode. So all of a sudden, the market, which wasn't even spooked on offerings 2 months ago, is now very spooked when you get an offering. And in this case, a GameStop down 13%. This is significant, significantly more than what the dilution should say it should be down. The way we calculate that's 3.5 million over the outstanding shares to come up with a roughly 5% figure, saying, okay, well, if they're diluting by a proposed 5%, shouldn't the stock just go down 5%? Well, it's down 14. So. But again, this is GameStop, random walk.
Well,
it can do whatever it wants.
It's a little more if you go by the float, right? Which is obviously a smaller number.
Okay.
Where float's like 45 million shares, so it's a little more if you go by. And remember, float is just all the shares available to trade in the market. Yeah. Shares is all outstanding is all the shares that exist, right? Yeah. So shares that are restricted or whatever. But so it's a little more if you go against the float figure. That being said, though, it is still not what I would call a huge offering. It's not nothing, but it's not huge by any means.
So again, random walk theory. I have no idea where the stock is going. I would say it's oversold right now compared to where the arbitrage would say. So that would make me so inclined to buy it. But because it's GameStop, I'm not buying it.